Let's get in some global perspective now as well. Hugh Johnson is now joining us on the phone line, Chairman and Chief Investment Officer at Hugh Johnson Advisors. Hugh, thank you so much for taking out time for us. Could you just, tell us about what do you make of the third straight Fed rate cut? Do you expect Fed to cut more if situation doesn't stabilize?
No, I don't, not at this point in time, and I don't, based at least in part on what Chairman Powell has essentially said. He talked about the Federal Reserve and going forward. He talked about what would be required for the Federal Reserve to reduce interest rates further, and he mentioned what he characterized it as it would require a material reassessment of economic conditions. That's one thing he said, which suggested that it would take something fairly substantial before the Federal Reserve decided to reduce interest rates further. And let's not forget, there are two dissents on the decision they made today, or two governors that believe that they should not have reduced short-term interest rates as they did today. So I think it would be very difficult for them to reduce short-term interest rates, certainly in 2019. Maybe if economic conditions get really significantly worse in the U.S. and, for that matter, the globe, then they might reduce rates in 2020, but it would require a material reassessment.
Hugh, good morning. This is Cheryl also joining on this end. If you look at what the commentary given by Fed Chairman with regards to the U.S., with regard to the trade situation, he's sounding a little bit more optimistic about it and a little more positive about the situation. Remember the last time when Fed Chairman sounded positive about it, Trump came out and lashed out at the Fed Chairman and also went ahead and increased tariffs on Chinese goods. Do you anticipate something like that happening this time around as well?
I think you're right. He was a little bit very upbeat, especially when he says, first of all, material reassessment, meaning it's going to take a lot. But the most important thing, he referred to Brexit. He did refer to trade tensions between China and the U.S., and he seemed fairly upbeat in his assessment of where those were. Seemed fairly positive that we're going to have a positive outcome for Brexit. We don't know. There's still risks involved. He said that. It's fairly interesting, but it looks like he's fairly upbeat or optimistic about the fact that we might have phase one trade agreement between China and the U.S. agreed in November. And so he seemed to think, or he seemed to say that it looked like business conditions, business confidence, not just in the U.S. but globally, is on the mend, is fairly upbeat. And that's why I think he's effectively implying that the Federal Reserve is not going to need to go further. We'll see. We'll be looking at economic data, not just the employment data for the month of October that we're going to see on Friday, but we'll see when we see economic numbers going forward. There's still, at least in my judgment, not his, in my judgment, a great deal of uncertainty and a lot of volatility in the economic numbers, numbers that we're going to see over the course of the next couple of months, and that might require the Federal Reserve to, quote, reassess.
Just a word on the risk on trade that has been going on in the market. You think that this rate cut will only increase that?
I don't think this rate cut is really, I think if I understand your question, is it going to materially impact trade conditions? And I don't think it's going to materially impact trade conditions, at least for the U.S. When you take a look at the impact of trade on the U.S. economy, especially if you look at the GDP numbers that we saw today, you don't see a very significant change or impact from either the export or the import numbers. They really were very benign, and at least at this juncture, we don't see much impact from trade. And I don't expect we will, let's just say, for the next quarter or so.
We leave it at there. Thank you for joining us this morning, giving us your view on the Fed Chairman, the Fed policy, what it means for the market, and also the going ahead, the situation, what it's going to be like.